Hey, welcome back to Midas Letter Live. My new co-host is a gentleman who in many parts of the world needs no introduction. His name is Mr. Steve Misener. He's a retired equity portfolio manager, and he's specialized for 30 years in small cap stocks for some of Canada's largest independent mutual funds and insurance companies. He's a chartered financial analyst and once won the Globe and Mail's Professional Stock Pickers Contest. Now he's a private investor, and Steve continues to follow the evolving trends in our junior markets. Steve, thanks for joining me today.
My pleasure, James.
Steve, the markets have been a mess in Canada. They're looking a little bit top-heavy and frothy elsewhere in the world. In Canada, cannabis has absorbed a lot of the interest and left the rest of the sectors on the Canadian exchanges more or less for dead. What do you see happening there?
Well, I mean, the cannabis space has maybe taken, in some respects, the negative side would be it's taken all the oxygen out of the room, because it's if it isn't in the cannabis space, people don't want to hear about it. It's been difficult for mining stocks and oil and gas and other traditional things that Canada's junior markets have been known for to attract investors, because the cannabis space has been so hot.
Right.
The offset, or the flip side of that, which is a positive, is that the cannabis space has almost single-handedly, really truly single-handedly, created so much value and attracted the retail investor back to the market after a 4-year brutal bear market in mining from about 2011 to say the beginning of 2016, when it began its bounce back upwards in mining and oil. And just to note oil, it's 10 years ago almost this week. It was in June of 2008 that crude hit its all-time high at $147 and change a barrel. Hard to believe, 10 years ago. The meltdown in oil didn't really start till 2012, when it cracked 100 on the way down to 30.
Right.
But nobody's interested in that space because of the power of the cannabis stocks, but it's created value. It's drawn the investors back in.
Yeah. So oil and energy stocks have been pounded down to nothing, but oil has sort of reversed and is now, you know, trending back towards $70 and you know, bouncing on either side of that. Does that mean, in your opinion, that there is an energy market that's going to come back in the oil and gas sector?
Well, it already has to some degree. I'd say by some measures, the bottom was really in the fall of 6 months ago, in the fall of 2017, when the final, what we look for in the capitulation sell-off, or the bottom bounce, and that crude prices had already moved up by then. One of the key measures was that the big tankers that were parked all over the world just storing oil, and they were all hedged out with futures, that those tankers finally started to go on the move and get drained out and sold, their inventory sold, and that the tankers were actually then finally needed to actually ship oil rather than just be floating storage units. So the opportunity there is certainly forthcoming, and crude probably trends higher, but people are still not really very interested in the oil stocks at this point.
Yeah, no kidding. I'm pulling up a chart of Crescent Point, and we're looking at, you know, this is the 1-year chart, and it's sort of, I mean, how would you describe that? It's all over the place. There's no conviction in it. There's no bull sentiment. There's no bear sentiment per se. It just seems to be wandering all over the place. And I guess to some degree that's got to be a reflection of what's happening in OPEC.
Yes, but this is also, this was formerly a big conservative yield play, and they had to they had to cut their dividends so dramatically, or their distributions. So that changed the kind of picture on this particular stock, as opposed to, say, a pure upstream oil and gas driller that was looking to build reserves. This was an income play that had to lose its status as an income play. So it's going to be a slower haul for this one before it gets real sponsorship, because they have to prove that they can bring their dividend back, and they've kind of lost the credibility by to the effect that they had to cut their dividends, still got great assets and the values there.
Right.
The other issue that seems to overwhelm the Canadian oil and gas producers is just all the politics and all the issues out in Alberta, that we know there's lots of gas in Alberta, we know there's lots of oil, but we have pipeline constraints. So some of the big plays have actually been on the U.S. side, all the big plays in the Permian Basin, et cetera, that have been so popular, and they don't have the constraints. So it's really been the U.S. side and the massive drilling that's been going on there. So long term, it's easy to pick that oil's getting consumed. The global consumption is something around 80 million barrels a day. It's a lot of oil.
Yeah.
And eventually things will tighten up. But I don't think any burning reason to, that says there's no burning reason to get in, although technically you can see it's forming a base around $10.
Yeah. To what extent would you say that the arrival of the lithium battery economy, electric cars replacing gasoline cars, obviously not substantially yet globally, but to what extent do you think that that is having an effect on the long-term sort of investor sentiment towards oil and gas?
I think it's more a sentiment issue. I don't think it's a structural or a fundamental issue, but psychology is important when people are buying stocks. If people aren't in the mood, you have to be a little bit of an optimist on a stock, because virtually every stock's got something wrong with it. Even the best ones, you can critique them in that way. So I think there's still I think they're still producing 20 million, 25 million cars a year, I think is the global number. Maybe it's a lot more than that. I might be wrong. It might be 50, but the gasoline engine, the internal combustion engine is not going away, regardless of what governments are doing to heavily legislate it. That's the positive on lithium, is that the governments are pushing the legislation and the targets so hard, but there's the World Cup.
Yeah.
Somebody scored.
Yeah. Awesome. Okay, so.
But sorry, to finish that thought out, that I think, like in the cannabis space, or any time that there's a really, shall we say, cliche disruptive or major, almost revolutionary change at government behest, that often the targets are set too optimistically. So I don't think all electric cars that are planned are going to be in place or capable of being in place. That's the positive on lithium, because you can make some pretty good forecasts on lithium, but I don't think the gasoline car is going away anytime soon.
Yeah. So, I mean, for a Canadian investor, if it's not cannabis, and oil and gas isn't holding your interest, what is there?
Well, I didn't say it wasn't cannabis. I haven't said that, because what I'm saying is that, in part, is that the cannabis space in Canada, and Canada has always been a fantastic leader in junior markets. All the years I was a fund manager, I was so literally thrilled to be involved in the Canadian junior markets, because we got to see things virtually from not just a Canadian perspective, but from all over the world. People came to raise money in Canada on the junior markets.
Right.
If we go back just to touch a little history, back in the 90s, there were 5 junior stock markets in Canada before the venture was set up. There was the Alberta Stock Exchange, there was the Vancouver Stock Exchange, the Montreal Stock Exchange. In Toronto, there was an over-the-counter market called the CDN. And there was the Winnipeg Stock Exchange. There were 5 stock exchanges. They all merged in the late 90s to become the CDNX. And then they were bought out by the TSX to become the TSX Venture. And then the TSX went public and became a profit center, not a cost center. So that was the evolution. So what I love is that the CSE on its own has, the cannabis space has virtually legitimized the CSE and created a globally recognized exchange, virtually because of the success of the cannabis space. And now we have true competition in the junior exchange markets in Canada. I think that's a big, big positive.
Yeah. So how would you categorize the cannabis? You know, it's a bull market, easy to say that. It's a bubble because all bull markets at some point demonstrate a degree of, inflation and deflation. That's just the life cycle of a market. Do you think that the cannabis industry, from what you've seen so far, has a long way to run? Or from your experience as a fund manager in the small cap space, does it look like it's getting a little long in the tooth?
Well, James, we've always said there's 3 price levels in the stock market: wholesale, retail, and fairy tale.
Okay.
I don't know where we are, but we're not wholesale anymore.
Right.
That's for sure. I think we're seeing some of the natural evolutions when a particular sector, and of course the marijuana sector is almost like the inverse of prohibition, where prohibition banned something that was legal, and then the market went underground and created huge profits for those players, and then it came back on. In this case, it's come out of the shadow market and it's evolving into the public and legal markets, and the profits then are being transferred there. But I think we're seeing the evolution of any sector where you have the big companies now. You're starting to see a little merger mania going on. You referred to one earlier today, and there's been others. That's because the bigger companies have fairly richly and highly valued currency. It doesn't mean they're done, doesn't mean they're overvalued, but they now have flexibility, and now it's proving to be, in some cases, better for them, both from a stock perspective, to buy stuff rather than to build it. That's always the decision for companies in any industry. Do you buy it or do you build it? Well, we've been building and funding the building. Now it may make sense to buy and do the tuck-ins. So diversification downstream, to go from the growing to the processing to the sales, maybe the dispensaries, maybe geographic diversification. We're seeing Eastern Canadian cannabis companies buying Western operations and vice versa. Or maybe it's that US play, or some of the foreign companies and coming forward, like the Chiron that you follow as well, companies like that.
Yeah.
So I think we're seeing that later stage evolution in a maturing industry.
Okay. The cannabis plant itself is a commodity crop at some point in its evolution. It's got different characteristics than other commodity crops. For example, it has a much wider range of qualities due to the fact that it's got 2 primary target ingredients: the CBD sort of complex, which is actually now looking more like 140 different CBD subcomponents, and then there's the THC complex, which itself has a wide range of different components. So is the crop itself, based on your experience, is the crop itself look like it's at one point going to reach a commodity pricing squeeze and become a razor-thin margin that's produced as a commodity in bulk by a few global players as an agricultural product? Or do you think that its wider range of ultimate products is going to protect it from commodity pricing in the long run?
Obviously, complex question. I would
Which
say,
I didn't exactly give you time to prepare for, did
no,
I?
there was no warning on
This
that
is
one.
the out of left field part of the show, Stevie.
Sure. Commercial break.
Yeah, right. We'll be right back with our next guest.
Cut to commercial. I'd say a few things. I think we're seeing some commoditization already. People are focusing on the processing side, and the one player that had the first license that came out now without actually having the grow arm at the beginning, and they're going to be making oil. I mean, that's one of the first. Yeah, the first license coming in. Or I think there's a couple of them now, but. So I also think that there have been a couple, I don't know the names, but there have been a couple of recent transactions where, again, maybe it was that east-west thing or west-east, but 2 pure growers alone were purchased by other players for around $15 to $18 million cash and paper, cash and stock deals, where I think the values of the pure solely growers were, licensed growers were at some point a little higher. So I think the valuation seems to be coming in a little. That points to a potential commoditization a little bit, as does the fact that people, investors and companies seem to be focusing on the downstream, which is to say, where's the value add? And I think that's to your point. If the grow part has its good margins, but the real value becomes in some of the downstream products and distribution arms, then people will start to focus on that. In terms of the whole supply side of the marketplace, I mean, I really not certain where to call that, because you've also got this unique situation in this particular field where there was the shadow or illicit market for so long, supplying whatever demand there was, substantial, both from Canada and shipping, you know, on a quiet basis down to the States.
Right.
What happens to that market? It's probably going to disappear. It's certainly, they're going to raise the punitive nature of those against those players. But how quickly will that leave the market to allow the legitimate licensed players to come in? And I think that will have certain pricing issues and pricing considerations, without a doubt.
The biggest cannabis company in the world, the first publicly traded cannabis company in the world, the largest, the many firsts, the first international, Canopy Growth Corp raised or announced a $500 million debenture today, a 4.25% coupon, a very low rate of interest, giving it, you know, clearly an investment grade status. Its conversion is at 20.757 shares per $1,000 of face value, which gives it an implied value of $48 a share, some 20 some odd percent premium to actually today's price. Does that signify for you, for the industry as a whole, a sort of a new status for the industry itself globally in the eyes of, you know, blue chip investors?
I think that does, absolutely. The idea that, first of all, it's been hard for people, anyone that wanted to own these things, to find this blue chip status. That's certainly the listing on New York recently of that company is significant. And now you can buy it with an income component. There have been juniors with various convertible bonds, et cetera, but to have a company of that magnitude issue an income security is going to attract maybe certain kinds of institutional investors that seek out that kind of income, even though 4+% is a modest coupon, but it also doesn't have the high coupon that reflects risk in a more junior security. So I think that attracts, and also I think the fact that the Canadian bank dealers are finally getting the space is another huge issue to touch on this. We've arrived, this blue chip nature, this institutionalizing of the space after it's been a retail and say hedge fund, more aggressive type investor space. CIBC co-leading a deal, BMO being the first player in Canada, I believe, if I'm right, with that placement they did with Canopy in January, and now I think being involved with this bond deal. So those are big deals, and I'm hearing that some of the banks are now lending to the operating companies in the cannabis space, which they had refused to do by internal policy. So I think just that could be a positive. It is a positive for the space. It is a blue chip issue and a legitimization. It also could be a new leg of buying in the space, because you've got maybe the bank-owned dealers, if they weren't playing at the corporate finance level, then their retail investors who may solely have an account at a bank-owned dealer are now going to start seeing issues of equity and debt securities from the cannabis companies that they had never played before.
Wow. That's quite an answer. I've got to think about that for a second and absorb it. Some observers in the marketplace, some, let's call them naysayers, let's call them bears for want of a better word, are comparing the cannabis market to the internet bubble of the first part of this new century that saw $5 trillion worth of investor value that had materialized since 1999, vaporized by mid-2000.
Yep. And
so if we sort of acknowledge that this is, in some respects, very reminiscent of a bubble in that there has been a extremely exuberant price run up in the asset class that is new for the first time. Do you think that that's a valid observation? And to the second part of the question, if you think it is, what is it that could trigger the meltdown that would equate it to the bubble popping?
Well, good question.
Another one you probably would have liked to have some time to prepare for, but
since we have a few moments, and you've brought up that internet bubble, I'd like to just give a couple of anecdotes about what I think caused the internet bubble, both the uprise and the collapse.
Okay.
It was all about Y2K, for those that recall. Y2K was supposed to be the end of the world, at the end of the millennium, that all the computers on the planet were going to hit this digital turnover and not be able to handle the new millennium countdown, if you will, or calendar clock. So sadly, planes were going to fall out of the sky and the power was going to go out. So that caused terror. Most of the companies on the planet at that time, public companies, did not have a big IT department. They were run by gray hairs, and they heard about this Y2K problem. So they went and hired, or they brought their IT guy, usually someone younger who knew about leading edge technology, and they said, we don't really know what this Y2K is. We have to have a policy, and we have to fix it, and that's your job, and we're taking all the CapEx we have, that we were going to build a new plant and a new warehouse and new equipment, and we're giving it to you, and when you're renovating the kitchen, you also renovate the bathroom, the walls are open, the pipes are there. So we're taking all the CapEx for 2 years that we would normally spend on our big corporations, and we're giving it to the IT guy, and the CTO, the Chief Technology Officer, became the most valuable, powerful person in any corporation. They spent it all because they didn't know, and while you're doing that Y2K fix, you might as well put in all the new servers, and thus JDS and Nortel and all these companies on the planet had an explosion of revenue. But it was a one-time thing. But they went out there and told everyone, this is the new millennium. This tech spending is perpetual 20% growth forever. But it wasn't. It was real spending. It was real revenue. And it was real profits. But it was taking all that CapEx budgets from all the corporations around the world, including all the S&P 500s, and shifting it there because they were afraid of Y2K and they didn't know what it was. Turned out it was a complete non-event. And then we got brand new everything, and we renovated the kitchen and the bathroom. We don't need any servers. We don't need anything because we're already spent it all. We're good for 5 years. And then the revenue in 01 disappears in the whole sector. That was a real revenue issue that pumped up, but the earnings went like this, the stocks went like this, because the revenue was, temporarily, artificially shifted to a tech spend that then vaporized. Okay. So we can blame it a little on the internet issue, but it was really a shift of tech spend.
Okay.
In that sense, the cannabis space might be different.
Okay, so we're going to bring in now another gentleman just because he's about to join us on that screen, which will be very entertaining. But Alan Brochstein is the founder of 420 Investor and part of the team that brought us, or brings us, the new Cannabis Investor, and he's been at this for over 5 years now. So he's got a cannabis newsletter and a cannabis publication. Alan, thanks for joining us today.
Hey, how's it going?
Good. This is kind of interesting, isn't it?
Yeah, definitely. I really enjoy your show, and I'm happy to be on it, James.
Yeah, it's great to have you here. So, Alan, we were just talking about first of all, we've got Canopy has just announced this $500 million debenture with a 4.25% coupon and a convert that basically values is at $48 a share.
Right.
Highly sort of representative of a very maturation or a new phase of the cannabis market. And we're trying to juxtapose that to the another broad consensus, if you're to look at all of the short positions being built up in all of these larger companies, suggests that there's a lot of fear and trepidation out there as to how far this market has run. So from where you sit as one of the longest running chartered financial analysts in the space, how do you feel about that generally?
Yeah, I think it's a tough time right now, James. I think everybody knows the valuations are high, but we're in kind of new territory here. So I'm the type of person, I thought Amazon was expensive, Google was expensive. So I try to learn from that. And valuation's a pretty tough thing at this stage. That Canopy deal was interesting to me. They've been very adamant about doing equity-only deals. They've been, along with Aphria, extremely conservative, while you've seen some others be a little bit more aggressive on that capital raising. With the Aphria deal and with this large convertible note, which I think that was probably about a $14 option. If there's actually some options that trade out there. I think it tells you that some of these guys are hedging their bets, and it's a land grab. They want to have money available. This has been one of the most surprising things. I was just checking my notes. $2.2 billion raised so far just this year. I don't know, $5 billion or so just among the LPs over the last few years, and I think it's going to take a lot of money to build these global brands and global cultivation facilities, everything these guys are doing. But I can see why there's a little bit of a war here.
Yeah, but so what's your personal opinion?
My personal opinion, well, I have been favoring the large LPs. I have a model portfolio at 420 Investor for just the LPs, and I have some other model portfolios, and I've been a little bit underweight the LPs in those. But in my LP-only model portfolio, I've sensed that it's going to be pretty tough for a lot of public LPs, and there's more coming, as you know, to stand out in the crowd and to really participate. When I look at the space right now, there's a shortage, and I know you're talking about a potential delay, and you're not the only one. We're all waiting to see what happens with C45. Canopy Growth looks to me to be the only organization that's ready for day one, Labor Day, let's call it. So a delay would be good for everybody, probably but Canopy. And it would probably be good for, I know this is going to sound terrible to people, but it would probably be good for Canada to just delay a little bit. Let some people build inventories. You have supply agreements out there that I don't see how they're going to be met. There's no inventory. There's no proof that they can scale up this fast. You're talking about, Canopy's been at this, really for 4 years. And you look at their level of sales right now, and you're talking about all these supply agreements that are bigger than what Canopy's doing right now. So my own view is, if you're going to be in the space, at least my view has been as of the end of May when I last updated my monthly model, is to be overweight the large LPs for now. But I'm finding some interesting stories, down in the less mature companies as well, James. Yeah,
interesting. So I'm curious, Alan, you're a U.S. citizen, but you've obviously been playing a lot of the Canadian LPs because in many respects they've been the only real game in town.
We say a prayer every night. Thank God for Canada.
Well, we could go off on a tangent there, but let's not go there. Do you think that the advent of U.S. Federal de-prohibition is going to constitute a shift in all of the investment interest globally that is currently focused on Canada? Will it then sort of start to abandon Canada and shift to the U.S.?
Well, I think Canada is well established, like the mining industry now, is the clear global front runner when it comes to capitalizing the global cannabis industry. And I don't see that changing. I don't see legalization in the near term in the United States. What I see is a relaxation of the regulatory environment. When I came onto the scene about 5 years ago, we didn't have a Cole memo, and it was very unclear what was going to happen when Colorado and Washington legalized. And it's been, I don't know, 20 steps forward, 40 steps backward, it feels like, all the time. Things move very fast, and they're all over the place. We really hit a low point in January when Jeff Sessions finally did something and said something. And it really impacted the way the real industry in the United States and the investors think. And look, let's face it, if you're an entrepreneur, you don't want to go to jail. And if you're an investor, you don't want your money taken from you, confiscated. So this has been the concern that's really slowed down the United States. I don't think everybody agrees with me, But I think that the Gardner-Trump agreement that was signaled in mid-April was a huge turning point. And whether it turns out to be or not, it's having a massive impact on the way people think about things. And what I tell my subscribers at 420 Investor is the U.S. cannabis industry, dollar for dollar, based on revenue or operating losses, which is what it is for the most part, is way undervalued compared to Canada. That's easy to establish. The hard part is to figure out how much should it be undervalued. It's federally legal in Canada. Canada has all these opportunities to exploit this with the globalization, whereas United States companies are not allowed to go into countries like Germany. So there's a 280E tax. And it is federally illegal. Let's face it. So all these things suggest it should be cheaper in the United States, but it's way cheaper, in my opinion, than it should be. And I know, this week GTI went public, and this is a Midwestern-based company. I know you feel strongly about MedMen. We don't have to denigrate them necessarily, James, but this is a very different company, and I bet most of your listeners don't even know this, but the numbers are out there for March for both MedMen and GTI. And GTI had over 10 million US in sales, while MedMen was about 7 and change. And you can find that at newcannabisventures.com. We track all the cannabis companies producing revenue in excess of 10 million US per year. And so the point being, this GTI came out. I don't think that many people had ever heard of it, quite frankly. And I will say they are not the only company like this. There are several very large companies, some of which are public, like MPX, which you just had, I believe. I think I was listening to that live, Scott. And but there's a lot of private companies as well, and they're planning to come to the market in the near future. And I think what's going to happen is you'll see some capital recycled from Canada into these companies. And most of them are going to go public through Canada because of what I said. Canada's like the cannabis industry for Canada is like the mining industry, and that's where the deals get done, James.
Yeah, you bet. The number of companies in the U.S. that are private, like there's a couple of big ones that are still private, but you look at them and you just know that they are, they're putting themselves together for a go public transaction, some way, shape, or form. Whether it's via acquisition from a Canadian listed company or whether they're going to list themselves in Canada, that seems to be what's coming down the pike for them.
Indeed.
Do you see a shift in the attitudes of U.S. investors gradually as Trump sort of moves, or at least expresses the idea that he's going to let states do what they own? It kind of conveys the sense that the federal prohibition is kind of superficial in many aspects. It's obvious that the Attorney General is not going to be able to act against investors or participants in the marketplace at the federal level if the president is supporting the right of states to make that decision on their own. So I'm wondering, are you seeing more U.S. investors get more comfortable with the idea of investing in cannabis even though it's federally legal?
Oh, yeah, for sure. And I think it's important to understand that it's all real clear now what's going on in Canada. But 3 years ago, nobody had a clue. Justin Trudeau wasn't expected to win. And the minute he won, there was a reaction to the market. I think the way to define the Canadian market is it's been 3 up trades, a staircase where you've consolidated. And we're in the 3rd consolidation now since Trudeau won. And while I don't think the United States is the exact analogy for Canada, it's going to be similar. We don't have to head to full legalization, but we're going to get to a period where there's what I would call regulatory rationale, and where people don't have to worry about going to jail and having their money confiscated or either of those things. And I think that's where we're headed. Definitely seeing interest in the United States that from investors right now, from both into the private companies as well as in the public space. This underperformance of U.S., and there aren't that many of them, but the underperformance of U.S. stocks since, it's been going on for years relative to the Canadian LPs has reversed. You can look at companies like Ianthus, and I want to mention that one because it's a great example of what you're talking about. Since April, when this Trump-Gardner deal was announced, they were able to receive a $50 million investment from Gotham Green. Gotham Green is a New York organization, hedge fund behind Kronos Group. in fact. Jason Adler. Jason Adler owns like 10% of Kronos Group. It's amazing. So, and they went into Kronos Group right at the bottom. Now they're going into not only Ianthus, and I mentioned that one because it's a cannabis company, but they're also investing in other U.S. companies as well. And so we're definitely seeing deals. Kush Bottles announced exactly a week ago a registered direct offering. They raised $36 million gross, largest OTC deal I've ever seen for a cannabis company. So the answer is definitively yes.
Steve brought up an interesting point about the requirement to have a U.S. brokerage account. Steve, what was the gist of that?
Oh, it was more if you're following U.S. investors playing Canadian cannabis stocks and maybe U.S.-based operating stocks that are listed in Canada. Just a general question: U.S. investors, do they need to open a Canadian dollar account in their U.S. brokerage firm to buy these Canadian stocks? And how do you see the evolution going to beyond the OTC to the NASDAQ, for instance, for cannabis stocks, either Canadian cannabis stocks or U.S. state-based stocks? Do you see that as a trend in the future?
Well, first of all, it's nice to meet you and to see a fellow CFA interested in the sector.
Absolutely.
So I tell people if it's possible to open a Canadian account. That's where the better liquidity is. It's not essential, and there's some weird things about when you're in Canada for your TFSA, you need to have CSE listed stocks. So I know there's a lot of things going on. The liquidity is going to be better if you have a Canadian account, but it can be done on the OTC. And I track them. They move in line. It's just, I think it's preferable, but not a huge deal to do that with a Canadian account if you can. As far as your other question, I think it's going to be slow to get better listings than the OTC. What I'm hopeful, I hate the OTC, and they get so mad at me when I say that, but it's true. I can't stand it. And so I've been relegated. I didn't even know what the OTC was a few years ago. I mean, somebody asked me a question, I was like, well, I don't know what a penny stock is. And so unfortunately, I've had to learn a lot. And I've gone into the sausage factory a little bit. I can't stand it. So I'm hopeful that things change. But unfortunately, this is what it is. And I would tell all investors, just because it trades on the OTC does not make it bad. With that said, assume it might be bad for sure. And we are going to see more NASDAQ listings, I would say, of U.S. type companies, but not direct cannabis companies. There was a blank check company, MTech Acquisition. Trades, I think their units trade with the symbol MTECU. They haven't announced their transaction yet, but they raised, I don't remember what it was, 50 million or something like that, a big number in an IPO, a real IPO on the NASDAQ. And they are going to buy a cannabis-related firm, an ancillary firm. So we're going to see more, and clearly some companies that don't actually touch the plant directly do have a shot of getting onto the NASDAQ or the New York Stock Exchange. For your viewers may not be familiar, IIPR is the symbol, New York Stock Exchange listed REIT that went public at around Thanksgiving of 2016, struggled the first year. It's up 75% or so from its IPO price now. That is on the New York Stock Exchange. It's a REIT. They lend to some of these companies that we were just talking about, the similars, the very large U.S. private operators, PharmaCann, Vireo, a few others as well. And so that's proof you can get to the New York Stock Exchange and take money from companies that touch cannabis, which is, to me, pretty wild. And I would say if your listeners are looking for what's going to be the next one that we know of that's trading now, I should say, they could go public on the NASDAQ, I would speculate on Kush Bottles. Kush Bottles is moving towards it. They changed their auditor. This is all public. They talk about it all the time. They've never given a date, but there's a company. They're on track, according to Vivian Azer of Cowen, to do about $83 million in revenue in the year ending August 31st, 2019. And that company is going to qualify for the NASDAQ. They will be on the NASDAQ, I would say, by the end of this year, early next year at the latest, after all these audits are completed and the paperwork filled out. And there's more.
Kush Bottles, is that that's a U.S.-based firm then?
Oh yeah, they're based in California. They have a little bit of operations globally, but it's mainly in the West. They have three big focus areas: Washington, Colorado, and California. Actually, they just opened, or they're in the process of opening a bigger facility in Nevada as well. And then they have a new East Coast facility as well. They've raised institutional capital. I mean, this is a layup, James.
Interesting. So
not saying the stock
a U.S.
price,
company listing on NASDAQ, that's really kind of a first. It almost makes like the federal prohibition completely irrelevant from the standpoint of an investor.
Yeah, we haven't seen any sort of problems for investors so far. Even with the OTC or what have you, there's been no lawsuits against investors. We've seen some pretty nasty lawsuits out there. They use what's called RICO, and like I remember I love Summit County, Colorado. I tried to get out there in the summers to Frisco, and there was a dispensary there, and they were charged with racketeering, and they lost. And this has been applied to a lot of companies. It's the same group of people. It's tied to, I believe, to that group SAM, and they try to use these weird laws, and they bring in all these investors, lawyers, service providers, everybody, and they try to sue them. And usually what happens is they pick on a small guy and he just folds. But anyway, we're getting off topic there. There's been no problem for investors. It's just unfortunate because I know that, and it makes sense, that most investors would prefer to buy NASDAQ and New York Stock Exchange names. And I think it's going to get better. And I think, I hope 2 years from now, I won't even have to be looking at the OTC much anymore, maybe just for those direct cannabis companies.
Alan, I had another question. If one was looking at the U.S. space and the checkerboard of different states as they begin to ease their licensing jurisdiction or legislation, would you see the future value for investors who were going in at this point to look at a company that might go to a state? Let's assume the state was generic of size and demand and things, but a state where the licensing to engage in the cannabis space was hard to get the license and therefore restrictive and not many, or a state where there's a plethora of licenses because you're going to get it and the market will grow more quickly? I mean, I know that's a pretty vague question.
It's not vague. It's a good question, but it's one I'm not going to be able to answer. I'll answer around it because I think there is no answer. I think you want to find good operators. And to get to your first point, these hard to get into states, for the most part, produce good operators. And that's what I've seen. The East Coast model, it's called. And that's basically east of the Mississippi. You're talking about the Midwest in the East, where these licenses are limited, and the companies have to try real hard to succeed because more often than not, it's a very high regulatory burden as well as limited patient access, the conditions, the qualifying conditions. New York is a great example. So I think that's kind of proof. If you can make it in New York, you can make it anywhere, I think they say. Or is that Chicago? But same thing, it's both those states. If you can make it in Illinois or New York, for example, that's a really good sign. At the same time, let's not forget, as much as we fawn over the opportunity in Canada, California is bigger than Canada. And California has been very difficult for real investors to go into because it's been a Wild West. The rules weren't known until recently, and this transition is very nasty. So the people I talk to are finally comfortable looking at California. The operators, I should say, are finally comfortable looking at California. And I think California is a massive opportunity now that it's in this regulated point. So look, I know, again, James, you don't like MedMen, but look at what they've done. They're in California. And by the way, I think the stock's overvalued. I'll go on the record and say that. But they're in California. They're getting into Florida. They're actually in New York. I'm sorry, they're not getting into it. They have a Fifth Avenue showcase. So, and they're in Nevada too. So you have a lot of opportunities. So I don't think you can say this is the best place to be. I think there are a lot of good places to be. And I draw from, I'm just watching the revenue grow. I'm watching these guys raise capital. I'm watching the interest. And I've been saying for a long time, U.S. is undervalued, but I couldn't say it very loudly. Now I say it loudly and proudly because I think people can make money. I'm not saying to sell Canada and buy the U.S., although that some people may arrive at that conclusion. I just think this is a good time where new investors can come into the market and take advantage of what to me looks like a better opportunity in the United States.
I want to clarify, Alan, it's not that I dislike MedMen. I've certainly had some guests who have opined clearly that they revile them for various reasons. The thing that I don't like about MedMen, and it's not to say that they can't overcome this and deliver a successful experience for all of their investors, but what I don't like to see in the evolving landscape of cannabis companies are these structures where the entire destiny of the company is controlled by a minute slice of founders' super voting shares, while all of the equity guys are forced into a ride that they might not be like the direction of further down the road. I equate it to agreeing to a third-class ticket on the Titanic for first-class pricing and agreeing to being locked below decks. If the captain decides to drive into an iceberg, you're going to be the first to drown. So that's the only thing I don't like about these, and I've been around the market long enough to know that even the most egregious share structures that appear to target and victimize the retail shareholder have turned around and delivered, against all odds and probability, a success or profitable experience for them. So, I don't like to see that, because I don't like the idea of somebody asking for my money and saying, you got to trust us. And your only vote at that point is to sell the share if you don't trust them. I look at MedMen and the sort of the slick polish they brought to the retail experience of their stores. Everybody equates them to Apple stores, and fair enough. I really appreciate that. I think that's what the entire industry needs. So I wouldn't say that I dislike MedMen. I haven't actually even got to know them that well, to be honest. I've only talked to Vahan Jamian, who's their head of analyst relationships. I can't wait to go to a store. I'm going to go to a store. And, so at this point I reserve judgment on, the potential for it. But certainly a lot of my guests are lined up against them.
Yeah, and that's a fair point. I apologize for saying you don't like them, that you don't like that aspect. And who does, right? And I too have been around for a while, and I'm not going to defend it. But like you said, you can vote, you can sell the stock, and sometimes these work out. But I think there's a lot of other things, maybe for another conversation, that might be problematic with the story. But I wish for their success, I will say. Yeah.
Okay, well, Alan, that's been... it's been great talking to you. This is the first time we've done this via video Skype. It's working out well. Where are you physically right now?
I'm in Houston, Texas, and heading to New York City this weekend. So I don't get out much, but I'm hoping to see you in August in Toronto too, James.
Definitely, definitely. We'll make sure that happens. Thanks for joining us, Alan.
Pleasure.
All right. Take care. Nice to meet you.
All right. So, Stevie, what do you make of all that? He's not saying, as he makes very clear, he's not saying sell Canada, buy US, but he's certainly making the case potentially that might be the trade down the road, especially if you're in some of the companies who aren't going to be able to sort of match the momentum, that unstoppable force that is now Canopy with this massive financing.
Well, first of all, it was a pleasure to meet Alan, and it's really interesting to meet via live interview someone who has the CFA and has been following the space from a U.S. perspective right from the start. I mean, the absorption of knowledge and watching the evolution, quite a library of information. In terms of what he was pointing out was, obviously in gentle terms, was the valuation arbitrage between the Canadian Canopy space and the U.S. And it can be, because of that unclear federal overlay in the U.S., regardless of pronouncements, that will keep a lid on some of the U.S. valuations for a while. As long as the individual companies maybe only operate within the individual state operations, then the valuation's there. But in terms of market size for those companies, as he pointed out, California being bigger than Canada, huge upside revenue opportunity for those U.S. plays here. But I think that the migration of Canadian investor interest to those stocks, I think it will be a slow, I don't know, a trickle, but it'll be a slow play as opposed to something dramatic because of that lack of clarity on the federal level. And I think that's the issue. Without a doubt, the play of Canopy going into New York for the listing, the huge bond deal, and if you're an international investor with big money and you want to play, Canopy became, with the listing and now this bond deal, it becomes the one-trick pony, and that's fantastic what they built.
Yeah, it's the first blue chip cannabis stock.
Yeah.
Yeah. Okay, we're going to leave it there for now. If you've enjoyed our broadcast, click on the subscribe, all the usual things that YouTube broadcasters say. Click the little bell and you'll get notified every time we're on air. But we're going to do this every day starting around 3 in the afternoon. We're going to have regular conversations with the most knowledgeable people in the cannabis universe. And of course, we have the best CEOs in the world of the biggest companies. On Monday, we've got Cam Batley joining us. Cam Batley is the Chief Corporate Officer of Aurora. We've got Nathan Woodward joining us for the first time. Nathan is the founder and president of James E. Wagner Cultivation Corporation. Just started trading last week. We're going to talk to him about his growing system. They are one of the few aeroponic growing systems we've got in the ACMPR mix. And then we've got also Jordan Sinclair, who's the Vice President of Communications for Canopy Growth Corp, to talk to us about some of the initiatives that they're moving forward with in the medical cannabis space. So please subscribe. Please join us again on Monday. We'll be back here at 3 o'clock in the afternoon. Thanks for joining us.